Let's do something different today. It is 9:31 on October 15th. So alpha wave trader method spelled out where oil heading to since a couple of years ago. Since a couple of years ago, it was extremely clear that oil is heading south, south, south all the way until 80. Guess what monthly chart is telling me? 80 is extremely temporary, as monthly is heading drastically lower down. Lower and lower down. So do not ignore this structure. In day trading room, we demonstrate the method on very small time frames. So today on daily chart, we're respecting 80. We know it's going to be temporary bullish rally when it comes to monthly chart. We also know extremely well where the bullish rally is coming from, as spelled out by the price since yesterday. Bearish trend came to the end and staged worthless bullish corrections, and currently buyers are struggling with very powerful selling pressure to the downside. It is not the place you want to buy oil. It is not the place you want to buy oil. So again, based on larger time frames such as monthly and weekly, oil at 80 only temporary support. Oil is heading drastically lower down, as spelled out by the price on monthly since the month of April. Pay attention to what happened on weekly in the month of September. 4 weeks of incredible struggle, beautiful buying areas that we took advantage of multiple times. So 80 is only temporary support. Oil is heading all the way to 78 area. S&P, magnificent collapse spelled out by the price since September at reversal zone 2. Is this it for S&P? Absolutely not. It is a temporary bullish pullback when it comes to larger time frames. We know that extremely well. If you're taking a look on S&P and you know anything about price, as spelled out by alpha wave trader method, the rally from 2009 potentially coming to complete end. This is the most important month since 2011. This is a bearish formation we had not seen since 2011. If S&P is not gonna find buyers within the next months, I will give it maximum until Thanksgiving. This is the inception of the bearish trend we had not seen since 2009. So buckle up. All the buying power is extremely temporary. When it comes to larger time frames on oil and S&P, bearish trend still heading south, south, south. So what do we do today in a trading room on S&P? We're respecting this level because it correlates with reversal zone on daily, but we also know it's very temporary push to the upside. I also wanted to remind to you what has happened yesterday after the close of the trading room, as I spell out to my students consistently. What I see on S&P and the importance S&P is giving to decision point 2, I never seen on any other instrument. You witnessed that on multiple trades yesterday. Adore, worship, and respect decision point 2 on S&P. This was a beautiful target. If you traded S&P larger time frame, you would know extremely well where to get out. This was a beautiful shorting area. Pay attention to what happened on S&P. Very powerful collapse. Buyers tried to come in after the close of the market and found selling pressure at the end of the minor trend. How predictable. And what is the price telling you when it comes to larger structure? S&P is heading until 1833.50. So this is extremely late short. That's why we're monitoring for a bullish pullback. Shorting was here or here. Ideal place right here. Right now, very temporary push to the upside, extremely late to short, but we know extremely well that S&P will head further down 1833, 1810, and all the way to 1775. So buckle up, volatility is picking up, more markets are heading south, so make sure you understand that and respect that highly. Markets are incredibly jittery, more downside pressure, faster execution, more knowledge, more stress involved in trading. Extremely powerful and extremely volatile markets. Do not ever place market orders if you're a day trader. Do not ever place a trade unless you understand precisely what you're doing. So, volatility is in. Bullish rally on oil set up from overnight markets is taking a bit of a pause as expected. S&P currently in bullish correction. So,